added it up the other day. So this is money raised, deals bought through, sourced through Twitter, or, kind of just the volume of business that I've done through relationships that wouldn't be there if I didn't have Twitter. And it's 88. Well, actually, it's more than that now because we did another one. So we do the math in my head. It's $93 million.
Wow, for raised equity.
Raised equity deals that we've bought through Twitter, sourced through Twitter, or sold through Twitter.
Unbelievable.
Yeah.
It's a powerful tool.
If you say I'm paying the $8.
So. I'm paying the $8. Levi, welcome to the show.
Thanks, Chris. Excited to be here.
Yeah, a fellow Class B industrial compadre.
That's right. Yeah.
It's been a long time coming. I thought we would start maybe a little bit just of your background, and then, let's just start with your background.
Yeah. Where to start? So I'm going to go way back.
Okay.
In 8th grade, I decided I basically wanted to learn more than school could teach me. And so I dropped out, took my GED, and I literally started reading everything I could get my hands on about business leaders, and people that had kind of shaped and changed the part of the world that I was interested in, which was business, always business. Got married real young, still married today. She's amazing. We have 4 kids. And I started flipping houses like real early on. So I've only ever worked for somebody else once, and that was for 6 months as a welder. Had a job, and then flipped houses for a long time, and then actually started a coffee shop together with my wife. 2 locations, sold it I think we did it for 18 months, had a successful exit, and just got the bug to kind of keep going, but realized, we were flipping houses while we were doing the coffee shop, but realized that real estate was the far more fun, more interesting thing that I wanted to do more of. And so just got rolling there. I still can't believe banks were as free with loans as they were back in the day, but I was able to buy sometimes 3 or 4 houses at a time, fix them up. I'd do most of the work myself.
Okay.
Sell them, and, just profitable over and over and over again. And then came across a really unique property. This is all in Sacramento, California.
And what years was the flipping happening?
2000 was the first one.
Okay.
Yeah.
So this was early 2000s.
Early 2000s. Good timing and then bad timing, right?
Yeah.
Early 2000s, yeah. Came across a property that had 5 acres of extra unused land.
Okay.
That I figured out was worth more than the building itself, the house itself. But this was the most expensive house that had ever sold in the city.
Okay.
And so a huge, 6,000 square foot house with a pool and a 5-car garage. And it was just very weird property. So I was 23 and thought I was sure, why not, right? I'll buy the most expensive house that ever sold in the city. So we bought it. We moved in. And then I, over a year, went through the process, hired a surveyor, but did all of the work myself to split the land, which needed to be rezoned first. Got it rezoned, split it, and then sold off the land and kept the house.
Okay.
Sold the land for more than I'd paid for the house. And then we sold the house for more than we'd paid for it in the beginning.
Okay.
So at 23, this was the first big launch deal. I mean, I think I made around $900,000 on this one. And
wow. So you're rolling.
Rolling, yeah. But also realized I'm not flipping houses anymore. I'm going to do land. This is way more fun. And so just went from there. In that same neighborhood, this is all, as I said, Sacramento, California, started buying land, rezoning it, got to know the city council and mayor real well, and was, every other agenda, I was up there with another piece of property saying, hey, will you, upzone this one? And I'm sure they're a little bit more cautious with it now, but I mean, I was buying R1 properties and getting them to go to R4.
Which is what? 1 unit to 4 units?
Yeah, well, per acre, it would go from 4 units per acre up to 30. So a significant increase in, just value of the property just by that.
Yeah.
And so did that, and we're flipping a bunch of them to KB homes, and some of them, they weren't all up to 30, but some of them we got that high on. sold to big builders for years, had a real good, solid business, kept growing the team. I was 27 at the time, 26, 27. Bought a home builder because I decided I didn't want to basically allow someone else to get that profit.
You wanted it on both sides?
Wanted it on both sides. Brought that in-house. A small home builder, but brought the main guy and his team in, and we started building on the lots that I owned and basically didn't sell them. In 2008, February of 08, I remember I had an offer from an international group. They came in, they knew my whole portfolio, and they offered $151,000 a door for all 400 lots that I owned, which I had at that point no equity. It was all debt or my own money in these deals. And I had about $60,000 a door in. So math worked out real good. Would have worked out real good if I'd taken it. But I was like, no way. The market's going to be fine not doing this. And so turned down what would have been a huge exit. I actually did end up selling one lot to them. It was about 15. It was one lot with about 15 homes that could be built on that, but then kept everything else. By the end of 08, banks said, no more. Like, we're not lending on any, we're pulling back all the loans that we're doing. I had many of the lots I owned. I had curb, gutter, sidewalk, storm drains all done, gone vertical on, I don't remember exactly, maybe 12 houses, sold a few of those, was starting to have standing inventory. And the banks were like, hey, clearly the bubble has popped. This real estate, like, we're not going to support you building this real estate. We're done. And so without the ability to build houses because there's no debt on them, it just started to unravel. And it was this very frustrating, tough season.
Was there as you recall, was it like a slow, gradual decline, or was it like one day everything was good and the next day everything was really bad? Like, as you remember it, how quickly did it happen? Like, it
was real quick. And maybe that's because I was a little bit less experienced. I think maybe some others saw it coming a little bit more.
Yeah.
But not far before, right? I heard rumblings of it for 60 or 90 days before that. Can't remember the exact date, September 21st or something, when, markets crashed. It was kind of this big realization all at once.
Yeah, nobody knew.
Yeah. Washington Mutual, Countrywide, all of these banks, all of a sudden it became clear they're insolvent, and, you can no longer refinance your house. It's not happening. You take debt out of any market, and all of a sudden it crashes.
So they had basically given, like, at the time you had a development loan to develop lots, and then for at least the first homes, construction loans to start building.
Yeah, often they were combined. So I would buy with either cash or bring in a couple of investors that were typically just debt investors on deals when I would buy them, and then go do rezone and plat map and everything else, and then bring debt in when we were ready to start construction.
And then, so they basically, at that time, you had the private lenders, which I'm assuming those are like 1-year loans or 2-year loans. They have a finite time.
Yeah. I mean, most of them I had done 5-year loans. So those weren't expiring all of a sudden, but it was, how do you keep making loan payments
if you can't sell
properties? Yeah.
And then on the construction loans, those were whatever they are, 1 or 2-year loans. And at the time, the bank was willing to say, like, even midway through construction on some, like, we're done funding the project.
Absolutely.
Leave it as it is.
Yep. Yeah. And I mean, an example, one project that I had $6.5 million into the project, 4.5 of that was debt. The rest was equity at that point. This was one of the ones that we had a few houses vertical, but all the horizontal was done. All the, connections of sewers, and had paid the, mitigation fees and everything. I mean, this was a completely buildable project. So $6.5 million in, the bank brought a buyer for $525,000 and said, we would like to sell this property.
Wow.
And
that's it.
And that's it. Oh, unless you come up with, and they had some plan of like number of reserves that we would need to have in the bank in order to do it. But it was very clear whoever was buying it's just going to sit on it for years.
Okay, so you get that call. The world's kind of crumbling down around you.
Yeah.
Like, everything you had worked for was being plowed in. Then what?
Yeah. So
Like the
25 or so employees. And, this process of just going through and laying them off kind of started with, there's, some people who didn't have real key jobs and then get back down, and had a just dear friend of mine that was a very key employee, had just built we had been voted the best home builder in Sacramento for 2 years in a row. Just an amazing kind of marketing engine that we'd built. And that was because of Jason. Laid him off, just couldn't pay his salary anymore. He had a liver disease that he'd lived with for years. Basically stress flared up and he went in the hospital and died 4 days later.
Oh my gosh.
I remember just this like crushing weight of guilt, of feeling like I had caused that. It was this like failure that had happened because of me, somehow not seeing what was coming down in the market and structuring this thing somehow incorrectly. And then a few weeks after that, my brother, who'd just been struggling with a drug addiction for years, committed suicide.
Dude.
Unrelated, but still, it's all of a sudden your brother's gone. It was just this like weight.
Yeah.
Like very heavy time. And meanwhile, talking to investors and explaining, or lenders really is what we had at the time, but explaining to them like, hey, what do you want to do here? We can keep funding this thing. Obviously, we're not going to be able to make interest payments. We can hang on to this property, or we can,
and like build it out and rent them out or something.
Yeah, or do something here, but it's going to require, I remember just spreadsheet after spreadsheet of plans of like, hey, we could do this. And oh, wait, no, bank debt's not available. We could do this. Oh, wait, this is not available. What's amazing is, and I'm so thankful for these people, several of the bigger investors just rallied around me and said, tough season, let me help you figure this out.
Yeah.
My biggest, I think, dollar amount biggest, if not, he's in the top 3 today, is someone who lost about $4 million.
Wow.
Back then.
Yep.
I'm actually seeing him next week. Excited to go hang out with him. It's just amazing to like the redemption in that. When you think it was just the end of the road, you're done. It's over.
Yeah.
I'm so thankful for the people who, and not, of course, there were some people that were just frustrated and like, definitely wasn't just this perfect. I'm not trying to like paint this rosy picture. It sucked.
Yeah.
It's bad, but so thankful for the people who gave me the advice and stood by me. And there was one employee, basically, Mike, I still talk to him all the time. He basically just kept working for free. It was like, we got to untangle this mess. Let's figure out how to do this. And
how long did it take to untangle?
It took some time. It was probably...
So the bank says, we're not funding any more of your projects. We're sorry.
Yeah.
Okay. You have a team. You deal with that. You're literally staring at a project that's not even half built out. And they're telling you quit building it. And then they said, we're just going to sell it. We're going to fire sell it. Does that get you off the hook at that point? Or
yeah, I don't know if all states have this, but California has a real strict single action recourse. So they can either, even though it's a recourse loan, they can only do one thing. They can either come after you as the borrower, which, at that point, all my assets were in this.
Yeah.
They're obviously not going to come after me. Or they can go after the property. And so they're saying like, hey, let's get 10% of our money back out of the property. And so that happened over and over again across a bunch of properties. No lawsuits came out of it. Very clean considering kind of what happened and very understanding. I cannot believe how many investors, sat down with me. And it was, meeting after meeting for months of just sit down and explain. And I flew all over the country and sat down face to face with people and said like, hey, so you invested in this property. It was worth this. And, as evidenced by here's some that have sold, here's what happened. Now it's worth this as evidenced by what is selling in the area. So,
and it was happening across the country.
Yeah. Right.
Yeah.
Right. It was obviously not, it wasn't happening like just a one-off situation.
How'd you raise money back then? There was no online wasn't a way. You were obviously meeting people all over. How'd you start raising money early on?
Yeah. Friends and family turned into
their friends, and
them explain, bringing other people in and
yeah. Is there, as you think about just even today and how you've built your new company, which we're going to get into, like what are the most valuable lessons you took from that time?
I always say PTSD is the best teacher.
Like, is there something you could have done differently then in hindsight? Like maybe less leverage, maybe like, was there even
Take the sale?
Yeah. There's a lot of people that wish they had sold.
I don't know. I mean, it's hard to argue that I was over levered, right? If you got $60,000 a door and they're worth 151.
Yeah.
That's a pretty conservative loan to, value ratio. Certainly don't start the construction company.
Yeah.
Don't start home building. Be more specific in one vertical.
Yeah.
And then don't be so greedy with kind of getting them all the way down. Like just take the money off the table throughout. I would have been, had I sold off half or more of the properties, and I mean, there were offers constantly like this. I was sitting on a gold mine of properties in a neighborhood right in downtown Sacramento that I had basically gone in and cleaned up myself. I was buying trailer parks and clearing them off and putting those people in apartments and paying for a couple of years of rent for them. And this was a bad neighborhood. And when I was done with it, it was really nice. Like you can drive through it today. All those projects have now been built and it's gorgeous. Like it's just amazing. And it was, when I got there, it was bad. And so had I been kind of less greedy and trying to squeeze the most value out of every individual deal, I would have had a much smaller portfolio and would have probably been sitting on the cash to be able to say, hey, we're going to mothball this one. Here's what that looks like.
Were you, they always say like build a really close relationship with your banker because when things get tough, one, it's track record, but did you have a relationship with the bank at that time, or was it just money from any banker and there was really no relationship there?
Several big banks, they all handled it extremely well.
Yeah.
I'm thankful for it's terrible for them to call the loans, but this all came from up high. I mean, this was not the local branch officer saying, hey, we looked at our portfolio, we're picking on you.
That's what you get with a big bank.
Yeah, exactly.
Have you ever thought and maybe looked at the market, just curious, because I know folks that went through something similar in other markets, how quickly the market rebounded, like if they had let you keep the loan, or if like, was it by 2010 or 11, things had kind of rebounded, or was it a slow grind back?
No, it wasn't until 2015 that they were getting built.
Yeah.
And even that, many of them was because those were possible to rebuild was because whoever bought it at such a low basis.
Okay, so you start a coffee shop with your wife, you sell it, you go on a real estate tear and do well, and then 2008 happens, which happened to a lot of folks, and then you went to Ethiopia.
Yeah.
That's not...
Started this off by saying I married well. That was obviously a really stressful season in our marriage.
Yeah.
And she was this rock throughout the whole thing. And
that's awesome.
Completely there with me, for me.
That's awesome.
Like incredible.
Yeah.
And we had kids at the time as well. She was really the driver behind, after it's all cleaned up and it was like, all right, I'm trying to figure out, start another business or go get a job. She's the one that said, hey, let's go do something different for a little while. And we'd heard of basically a situation in Ethiopia where there were kids that needed an orphanage, but no organization existed. There's this short-term group of college students had gone over there and found out this situation with these kids and started collecting them and putting them in the house. Well, they were all leaving and going home. And so we went over thinking, 6 months, maybe a year, like we'd kind of just do this reset as a family.
Did you go visit Ethiopia first? Make sure.
I did. Jessie didn't. She was pushing for this, but was like, why don't you go check it out and see if we could even make this work?
Yeah.
But yeah, we packed up and moved to
the whole family.
3 kids at the time, ended up adopting our 4th while we were there. We moved to a little town called Jinka, which is an 18-hour drive on mostly dirt roads from Addis Ababa, which is the capital city of Ethiopia. Rented a literally mud house. The walls were made out of mud, and just grinded it out. Built this, first just rented a building and then ended up building more. started with, when we got there were 9 kids, and then they just kept coming and coming and coming in.
Did the government give you, like, how'd you get the money to fund the orphanage?
So there was some people back in America that were basically helping raise money, and different churches and different groups got together. This was when Facebook was cool.
Yeah.
Back in the day, Facebook is what Twitter has, hints that it could be lately.
Yeah.
And so we started a Facebook page and just started talking about it. And I would go on there and write, and I was blogging too. When we had internet access, sometimes I was dictating over the phone a blog post that I had written that would then get posted, and, started a 501c3 in America and just started raising money for it.
And you built an orphanage.
So still going today. Over 200 kids.
Wow.
That have been rescued. Several of them are now graduated college. One of them's a doctor. One's an engineer. The model is we basically, and this kind of evolved over time, but we rent small houses in the community and then put a widow from the local community and 5 or 6 kids from the orphanage in there with her. And so it's basically like building a family unit.
Yep. What was it? I mean, give me like a picture. What's it like to move to a third world country? You've been on top of the world for your prior career doing real estate in California, and now you're in a mud hut in Ethiopia. Like, what was those first few months, year like? Like, how can you describe it?
I mean, extremely humbling, but also like just puts it all into perspective. Money just becomes such a different, you realize how kind of unimportant it was and what I was striving and putting everything I had into. But then working there was just so much fun. Like, I honestly, I realized, like, after a couple of months of being there, it was like, because I'd read all about John D. Rockefeller and Andrew Carnegie and Thomas Edison, and was just fascinated with this kind of, turn of that century, 18th to 19th century time in America, where it was like so much opportunity existed and so little kind of regulation stood in the way. And so it allowed you to come in and just kind of dream big and create something. And getting there, it was like the structures didn't exist yet. And I felt like I could dream them and kind of speak them into existence and pull the resources together and make it happen. So, I mean, within a very short time, we'd built a whole organization over there and hired staff and done all of this. It was so much fun to like build something somewhere that was desperately needed.
I guess it's nonprofit, but you could still probably answer it the same way. Like, how is business there done differently than in America?
Yeah. So I got into business there pretty quickly because we needed a work permit in order to stay in Ethiopia, and you couldn't get one under a nonprofit. And so I basically had to start some sort of business there. And so I ended up starting 4 different businesses in Ethiopia, good size. So one of them was the largest beef feedlot in Northern Africa. That was the biggest in terms of employees. Got to 3,000 employees.
Wow.
Had 8,000 acres worth of land, grew all of our own corn, had a beef processing center, feedlot, like did all of the, everything, all the way to, we were exporting $2 million a month of beef out of the country.
Wow. And does the government help you fund that, or is that private capital raised from locals? Or
the government gave us the land, but we were raising money from U.S. investors, big institutions, like the Norwegian government was a big investor in that.
Wow.
There's a lot of, basically we were saying like, hey, we can create jobs and a market for local farmers here, but this doesn't exist.
Right.
We're going to have to do it at scale. We're going to have to bring in like, these kind of foreign people who know what they're doing to come in and kind of.
I was going to say, is the labor and the skilled labor there? You have to train everybody.
No skilled labor, but there's a lot of labor and they need jobs real bad.
Yep.
So built several businesses. That was really fun from a like business climate perspective. We were able to, like, there are a lot of local banks there that are able to lend on projects. There's a lot of equity available all over the world that's looking to kind of invest in things that do good as well. So the other one of the other big businesses I built was a real estate development business building apartments that would rent to the U.S. government.
Okay.
And so we literally would take our kids to there was a swimming pool at one of the hotels there, and we started meeting all of these embassy families and talking to them, and they're telling us about how bad their housing is and how much they pay in rent. Like, it's staggering how much they pay in rent. And I was like, well, I mean, I can build you a building. Let's do this. And so started a business that builds, it's still going today. So I've sold all of this in 2019, but it builds apartment buildings that rent. Basically, the State Department in the U.S. rents them for staff housing. And so first one was a $150 million building in Ethiopia.
Damn.
Then Kenya and a whole bunch of different countries. So when I left, there was a $1.1 billion pipeline of properties that were at some point in development. And the government's just like, if you can build it to this standard, and they gave us a whole book of, it's got to be seismic and security and all these different things you have to meet. But if you can meet this standard, like, we will rent it from you indefinitely.
Was it foreign contractors or local contractors that could build it?
Mostly foreign, like team leads, but then local labor.
And probably this is the dumb American question. Do they have like zoning laws and permitting? And is it very similar to America, or is it more the Wild West? Like, if you can build it, go pick a piece of land and build it.
It's similar to Houston.
Okay.
Where there is some zoning and there is some plans, but it's not real tight.
Yeah.
It's more just who you know. And so that was my job, was kind of business development lead. I would hire the team to execute, but then I would go literally a couple of the projects we needed the prime minister's signature on, and I would just go sit in the prime minister's office and wait. Oh. And one time I was there 11 days in a row, and he just kept not meeting with me. Finally, the lady came out and was like, he wants to meet with you. Like, all right.
Great.
Yeah.
Was there corruption or anything? Like, did you have to learn like a new way of, community? Like, does business get done in a way where, I at least feel in America, there's a lot of trust built in the system. There's legal, there's repercussions. Like, does that infrastructure exist there?
In Ethiopia, the culture is very passive. And so no one will kind of outright do something like steal from you. Like, you can walk down the street and no one's going to come beat you up and try to steal. But if they can slip their hand in your pocket, they will. And so that kind of comes throughout the whole culture. So there was no like flat outright corruption, like no government officials calling us and saying like, hey, you have to pay. But they would call us and say, hey, I know you're hiring. My cousin really needs a job. And so, okay, like, fine, we're going to hire your cousin. Like, we have to do that,
Okay. So you spent 6 years there. When was the writing on the wall that our time in Ethiopia has, we've done our time, we're going to head back to the States?
Our oldest was starting high school.
Okay.
So at this point, we have 2 biological kids. Our youngest 2 are adopted. We adopted the 4th while living there. She actually came into the orphanage as a newborn, just a couple of days old, and we adopted her.
Unbelievable.
She's 14 now. Our oldest was starting high school, and it just was like, we got to have some home country experience.
Yeah.
So I'd started all that. I was running everything over there, had a business partner who was based out of Austin. So that's why we moved to Austin after. Austin basically became like the headquarters for this international group of businesses.
It's not a bad spot.
Yeah, it's a good spot. I like Austin.
So when did you move back to Austin?
2015.
Okay.
Yep.
So moved back in 2015. You
ran it for 4 years still?
Okay, from remotely basically.
With that partner, going back, traveling a lot, which was a stress on the family that was not the best decision.
Yeah.
Came to a point where it was like, hey, I'm on the road all the time. Like, if there's a way for me to exit this and start something local, it's time to do that.
Okay. And
so sold, basically it was a kind of conglomerate of businesses. The beef business, the real estate business, also had a big consulting group, and then a chain of medical diagnostic centers. Sold them all together. My partner actually bought me out. He brought in a private equity fund and took me out, which was fantastic. Good timing.
Okay. So then now let's get to the goods, not the good stuff. This has all been good, but So then did you take like some time off, or did you already have an eye on Class B industrial? How did Harbor Capital come to be?
Yeah, so took some time off. This was, it really actually didn't close till January of 2020. So this was right before COVID hit. Good timing on that front. None of us knew what was coming in March of 2020.
Yep.
It was fantastic. It was just like great timing to just be with my family. We just closed this thing, didn't have to go out and work, gave me time to kind of think about what's next. I'd been an LP in industrial deals, knew it was real estate. Whatever I did was going to be real estate. Looked at a bunch of different markets and decided, drew a circle around home saying, I don't want to travel that far. I want to do something that's going to work in Texas. Our family loves living in Austin. Like, what can we do based out of here that's real estate, but is also kind of non-consensus?
Mm-hmm.
I feel like so many other markets were just already getting saturated. The, Class B apartment flip was already like, everybody's doing that,
Yeah.
And industrial was drawn to the triplenet lease, the kind of non-dramatic nature of the tenant relationships, the fact that it's, non-consensus, meaning there's just not that many people looking at it. And it felt like it was one of those markets that I could get really deep into, and it had a lot of runway to it as well. And so started Harbor Capital in February of 2021.
Wow.
And so, we just passed 2 years. Bought the first couple of deals by myself just to kind of test it out and make sure it worked. It did real well on those, and then started bringing in LPs and growing it fast.
Did you know at that time that you were going to stay hyper-focused on just industrial, or even in February, you're like,
funny,
maybe we'll
I've
just
got
do
this
deals?
paper that I'd wrote out before even choosing, kind of what Harbor Capital was going to be. And it was very clear that it was going to be hyper-focused on something. Whatever market I was going to find had to meet all of this criteria and have the ability to just,
go
head down, go.
Okay. So like, as you sit here today, let's kind of go through the things that still may be true, that you thought to be true then, but like that you've obviously learned over 2 years. Like, have you even niched within Class B? You do a lot of single tenant.
We do. Yeah.
So talk about just kind of the progression of how you look at deals and what you're looking for and what's like a fastball deal for y'all.
Yeah. Close in is a big deal. So we're only in Houston and San Antonio. Those are our two markets.
Okay.
We've got a couple of deals we've tried to put together in Austin and just have never found anything that penciled.
Yep.
But just love, I can sing the praises of those two markets. And I think there's a lot of runway left. Like, we're nowhere near coming to, anything close to a problem in those markets. There's just not enough stock and tons of demand.
Yep.
We like older buildings, but not too old, in the kind of 70s, 80s, 90s stock. Single or multi, we've got some multi-tenant deals. We like these kind of 20 to 50,000 square foot single tenant deals, or 150,000 square foot multi-tenant with a bunch of small units in it.
Yep.
We've got to have some sort of value add component. All of our underwriting assumes interest rates are going to get worse. And since day one, it's been this. Interest rates are going to get worse. Property taxes are going to go crazy. Rents are going to go down. And so with that filter, we pass on almost everything. We're just not looking to buy stuff. Like most of what we see, it's like, nope, doesn't work. But we find the deeper we get into these markets and the more that we're learning, like, the names of all the owners and showing up at their, bringing them a bottle of whiskey for the fourth time, like, or something, some gift, or just start dropping in saying hi. Eventually we're finding people like, okay, yeah, I'll sell to you. And so, we're able to find the value add that we like the most is something that's occupied with a couple of years left on the lease, but a really low lease rate.
Yep.
That we can come in and stabilize. And we're still, we've been able to over and over again find properties that are a good bit above the going in interest rate. And so right now we've got a bunch of stuff in contract that's 10 and 11 cap stabilized within 2 years. So,
and stabilized being, like you said, maybe single tenant, 2 years left on the lease, way under market, and you're underwriting that you'll either mark to market or they'll go vacant and you'll bring in a new tenant.
Yep.
Do you buy anything that is vacant already? Like, have you ever bought something that's already vacant?
We have. Some of the best deals we've done have been these ones where we go in and just are able to steal them. Like, it's incredible the deals you can get when you buy a vacant building.
What insight do you have on a vacant building that maybe the current owner doesn't have or that the market doesn't have?
I was thinking, we've been trying to figure this out, a kind of, what does a good seller look like?
And I'm going to ask you about your tweet the other day that your data finds that a lot of them are
conspiracy theorists.
Yeah.
It's so funny. That is a very weird finding, but it's true over and over again. We find that there's people who are distrustful of professionals. They basically, a broker shows up and says, I think I can do a good job for you. And they're like, get out of here with your stupid 6% crap.
Yep.
I don't want to hear that. I know what's best. I moved. We bought one from a guy recently. He told me he's moving to Montana. He's buying a bunch of AR. He has got the AR-15s already. Moving to Montana so he can look down on all the peons below and doesn't want to see another soul in his life. And he's just getting out of Dodge. Well, he sold us a building for $94 a foot that we've turned over tenants into, and our last lease was at $14 a foot that we signed. It's incredible. Triple net, $14 a foot. So, I mean, this is like a 12.5 cap.
And you're probably in the meantime converting gross leases to triple net leases?
Yeah. That was a multi-tenant. It had all gross leases, and we've been able to convert them all.
So is most of your deal sourcing off market through the broker channels, or a lot of cold calling and door knocking?
Almost all off market, but not directly sourced. We've just got we've got a dozen or so great brokers that we now work with that know what we're looking for. They're cold calling and finding stuff for us.
What are you not looking for in Class B industrial?
That's a good question. Specialized, any kind of building that has one or two tenant types that it must be used for.
Yeah.
That's a mess. And so we want to be flexible. I always joke, a gymnastics facility or we've got a big metal plating company that we're leasing to a building right now, or a third-party logistics, or, whatever, a plumbing supplier. I want this building to work for all of those so that we're not kind of stuck in one market. We've done a couple of oil and gas leases. Those are always giving me a little bit of heartburn because that market is so cyclical.
Yep.
But Houston's got a lot of them and they pay really well. So it's kind of inevitable that we'll run into them.
And going back to like leverage and financing, how do you think about that?
We started talking about 2008. Extremely conservative. We want, and I don't mean loan to value, because I actually don't like, our purchase price is always so low compared to what we're going to stabilize at.
Right.
I'll take a 70 or 75% loan to purchase cost loan, but I want my DSCR, my debt service coverage ratio, to be really good.
Yep.
I want to know that we've got huge reserves in place, and a lender that, understands like, hey, this one might be vacant, especially on a single tenant building. This one might be vacant. We've got 2 years worth of reserves that we're sitting aside here. And, here's the playbook.
Yep.
We'll use debt, but real conservatively.
So on those single tenant buildings, you'll underwrite sometimes up to 2 years of vacancy if a tenant were to vacate.
Yep.
So for 2 years, we could afford to keep leasing, carry the building. And,
Yep. We've got, every deal we do has huge reserve funds, which is good from a banking perspective, because banks love us when we show up with, some of our deals have, multi-million-dollar reserve funds. Lenders love that. They always require that some of that be locked to, so that we've got a certain amount of interest reserve, but then the rest of it just sits there and waits in case we need it.
And you do all third-party leasing. So you hire third-party leasing brokers in certain markets to do certain buildings.
Yep. Yeah, we've got, obviously only in 2 markets. So there's a couple of favorites. And it depends on the unit type. We've got a CBRE broker in Houston that does great for the bigger buildings, and then a couple of smaller guys that, if you're renting a 10,000 or 5,000 square foot space, it's not going to be one of those big, been in the market for 30-year brokers.
Yeah.
It's going to be somebody smaller who is going to go knock on doors, because that's what it takes to go get a small lease.
Well, so you started buying in February 2021. On some of the deals that were, tenant has 2 years left on lease. Have you had one where they've had to either renew or leave? And did they renew or did they leave? Or
yeah, we've had several, because quite a bit of what we've bought had 5 or 6 months left on the lease.
Okay.
Almost always renew. and don't have a problem with saying like, hey, here's the comps, here's what's going on in the market. And they'll, every one of them will go out and look and talk to a broker and then come back and say, we actually don't want to move. We'll pay the market rate. Let's go.
Yeah, we found that a lot right now. You'll see tenants come to renew, they'll get the renewal rate and they'll go shop the market. And then you hear from them a couple of weeks later and they're like, we're going to stay put.
Yeah.
What's happened to rental rates, as you know, in Texas has been astronomical. And even to this day, they continue to rise.
Yeah.
There's a lot of tenants in the market, as you know.
Yeah, we were talking about this this morning in the office. There's kind of this, real estate's really interesting. You have national trends, which are interest rates and cap rates changing because of interest rates going up and down, and then banks' willingness to lend. And so that's going to put a force on a market. And then you have these local forces, which are just demand, tenants who want space. And Texas industrial is going through this kind of moment right now where we've got a ton of demand. And then this pressure from kind of above or from outside, right, of cap rate, expansion and interest rates are hard. But what happens is kind of the inevitable now is the pipeline of new development is just being cut off.
Right.
And so then, I've talked to a guy yesterday that had a 1.5 million square feet that he was getting ready to build. Whole thing went under, shell, done, not going to happen.
Yep.
Over and over, that's happening. And so the demand is still there.
Right.
Supply is getting cut off. And so we're going to end up at we're on a crash course with very close to 0% vacancy, which is just going to put continued upward pressure on pricing.
For sure.
And so far, I don't know what you guys are finding, but so far the interest rates, that's kind of a non-issue because lease rates have so much upward pressure.
Yeah. And I don't know if it's different for some of the single tenant stuff you're building, but especially the stuff we're buying, the inside the loop multi-tenant, you can't rebuild. There's nobody building it for the last 10 years anyway. You really can't replace it. And you can go out to the sticks on the outside of town and,
of course, yeah,
and build, but I don't know if that's different in the 50,000 foot warehouse space. But to what you said, a lot of people will say, well, look at these numbers. There's record industrial space under construction. I'm like, even though we share the word industrial, it's a totally different asset. We're not competing with those people.
Right.
And so like you said, there has been little to no rebuilding of kind of our little niche. And like you said, there definitely isn't going to be now, even if there was, and tenant demand has gone nowhere but continue to climb.
Yeah. Yeah. It's, every lease that we've signed, it's been at a higher rate than the one before it. And that does not seem to be slowing down.
There's one deal you did in particular that I thought was interesting. Maybe we could talk about the forward deal you bought in Katy.
Yeah.
Describe how that all came to be.
2 different projects that we're doing there, a total of 350,000 square feet. A broker that we've done a bunch of deals with there had a good friend of his that's a contractor that builds industrial. So it's the Urban Company that's called. They are a Houston only, industrial only, tilt wall only builder that just churns these things out day in and day out. He had bought a couple of parcels of land many years ago at an extremely low basis with the thought, so this is the owner of the Urban Companies, with the thought that he would eventually build to suit individual buildings on these over time. And he was just kind of waiting for the time and had already designed these couple of industrial parks and was getting ready to do this. And this broker came to us and him and said, hey, why don't we get the two of you together and talk about what could be done? And so I think that took 6 months to negotiate this, but we basically did a deal with him. They're going to be done within the next 60 days. We're buying both of these as soon as they're finished from him. And so these are Class A tilt wall, 28-foot ceiling, fire sprinklers, dock high doors, offices built out like a Class A office space in each one of these, like level 5 smooth walls. Like these are just gorgeous buildings. And they're between 5 and 40,000 square feet across these 2 parks in Katy, which happens to be right near the Tesla factory is going in.
And you didn't know that at the time.
I didn't know about Tesla. We knew, if you drive through Katy, like these big bombers, these 500 to 1 million square foot, there's a whole bunch of them and then none of them are vacant.
Right.
Like it's just, these things have been getting built and leasing right away. And it's Costco's distribution, Lowe's distribution, Igloo. The list just goes on and on and on. Ross Dress for Less, Man Trucking, huge, distribution facilities going in, but there's no stock of this kind of smaller, 5 to 50,000 square foot building. And so we've got a whole bunch of it coming online that I could not be more excited about. So our going in price really,
which you negotiated the day you negotiate the price before anything even starts coming out of the ground.
Yeah, I mean, more than a year ago, we negotiated the price. So that price, even today, that price to construct is a lot more.
Right.
But he had bought out all of the materials by then.
Yep.
And so it's working out well for him. But also, we're riding on the back of his, 7-year ago land purchase.
Yep.
Katie's one of the fastest growing cities in America. So his land basis enabled him to make some money on it. And we're just going to kill it on these things. Like, I'm so happy with these.
Okay. So you say, okay, Mr. Guy with land, you're going to build this project. We agree that at CO, is that,
Yep.
We're going to close at X price.
Yep.
A year goes by. How does that work with banks, investors? You obviously, I think with investors, you can raise money, kind of tell them the story of, did you have to put like a deposit down up front?
We did a deposit. It was about 10% of the total construction cost or total purchase price.
You do that with cash or with
cash, non-refundable.
Right.
And then went and lined up debt and got just incredible debt terms. I'm actually really happy with what we were able to get. I mean, not the same debt terms we would have had a year ago, but still really good considering that we're buying brand new vacant buildings.
Like how soon can you lock in that debt on the forward?
Obviously with debt, it's at close is when the price is locked. But we've got fantastic indicative terms right now.
That's awesome.
So, yeah.
Can you start pre-leasing those units even while he's building? Do you control leasing on them?
We do.
Okay.
Yeah. And we've just started that. We did not expect, our business model had no units leasing prior to completion. Just with this, we found this always with this small of tenant, they want to see exactly what they're going to get. And so we've been talking to Sherwin-Williams and a couple of different big tenants that are going to go in there, but everybody's basically waiting for them to be done.
Can you,
it's not going to take long though.
how big are the individual buildings? Like 40,000 feet for one building or?
Yeah. So they're all individual standalone buildings.
Okay.
They're all parceled separately.
Okay.
So we have the ability to sell them off if we want to over time.
Okay.
One of them's in an opportunity zone. And so that one we're keeping for,
cool.
for 10 years.
Okay.
But then the other is, we basically could just, if we've got a national credit tenant, a publicly traded company, we could sell off individual buildings to a 1031 buyer or something if we want to. So good bit of flexibility.
Describe, just for somebody listening, like what happens when a group like Tesla announces that they're coming? Like what did you experience in the market there shortly after or have been experiencing?
Immediately knew, brokers who kind of weren't looking at the area started coming in.
Yeah.
I mean, Tesla, it's funny, this one, they announced the Austin factory years before it actually started breaking ground. And, we kind of knew it was coming for a long time. It was fast, but it still took a while. This one, they leased an existing 1 million square foot building right as it was getting finished. And so, I mean, within days after it announcing, you saw Tesla, cars outside and they were moving in right away.
Okay. So they took an existing building.
They took a brand new existing 1 million square foot, 1,050,000 square foot building.
Let's talk a little bit about just the market, like in Houston, San Antonio. We can go back and forth on it, but how do you think about, we can talk about the Texas Triangle, we can talk about each market individually, but like when someone asks you, like, what are you thinking about Texas? Why Texas? What's your response to them?
Yeah. I mean, the beauty of how these markets play together, port, Mexico, geography, low, relatively low cost of land, plentiful labor, transportation hubs, DFW with the big airport. Like there's just so many things that play together to make this just geographically. I mean, people talk about like Texas's politics is the only thing. It's actually the geography that's the most important thing.
Right.
There's certainly a lot of other things that help. If a pro-business government helps, our property tax is not necessarily the best part of Texas. And it sounds like there's some good legislation coming down the pipe that's going to help with that. But we always just underwrite to kind of the worst case scenario. And so it always looks better than we've underwritten to, but property taxes are not great when they can kind of uncapped go up.
And a lot of people say Houston obviously it has some energy influence, not anywhere near what it had in the 80s and 90s.
Yeah.
But they also forget, like you said, the port.
Yep.
It's probably the medical capital of the country with MD Anderson and everything that's going there. The tech scene in Houston is huge.
I heard recently, I can't remember the exact stat, but something like 80% of the Fortune 500 companies have a major, either headquarters or major office in Houston.
Houston's unbelievable.
And that port is doing 2.5 times the amount of cargo that it was doing pre-COVID.
Yep.
And then that has stayed steady. That basically was all the other major ports in the country kind of got overloaded and they looked to where to go. And Houston built out the infrastructure really quickly.
And you're seeing, like, I think they announced, I'll probably get the figure wrong, I think it was like 10 billion that they announced would go into the port over the next 10 years to dig deeper and expand and add new facilities.
Yes. Yeah.
Which is, I think every port along the southeastern United States is about to get a lot more traffic.
Yeah.
As onshoring comes in, Mexico continues to become robust.
Yeah. And neighboring Mexico market is a huge benefit. Just the parts that go back, like car parts and assembly parts for, things that are assembled here or assembled there and sold here. Like that is incredible. And that's one thing that San Antonio really has going for it. It's only 2 hours from the closest Mexican border. Doesn't seem like it is, but it's right there.
Yeah. It's we're not in El Paso, Laredo, but you see what's happening in those markets. It's astounding.
Yeah.
I'm from El Paso and I can tell you what's going on there it's like nothing I've ever seen before.
It's amazing. Yeah. Are you guys buying there at all?
We'd like to, if anybody here is listening and has a deal. The thing, I won't mention any names, the thing that I think we look back on, we were trying to buy there in 2016, 17, and we could have bought deals for like $40-$50 a foot. Well, I'm from there and a lot of my mentors and just people that have been around, they were buying that stuff for $10-$20 a foot, like when nobody was paying. So an outsider coming in at 40 or 50 at the time was like crazy. And it's probably that bias of like, had I not been from there or not known anybody, we probably would have pulled the trigger. But that market's gone crazy.
Yeah.
So we're looking, we'd like to get there. Laredo is jam packed. There's a lot going on there.
Almost 100% occupancy. It's like 99.6% occupancy in industrial.
It's nuts.
Laredo. Like, what the heck?
I know. And
amazing.
I think it's going to keep going up.
Yeah.
And like you said, especially a lot of the stuff going on in El Paso and Laredo is the new stuff. And if those are going to go down for a little bit, it's going to create even more or less vacancy and more demand.
Yeah, it's true.
Do you kind of had a quote, you would say, buy, refi, die, which is, I think, a way of saying we like to hold long term. How do you think about holding periods?
Yeah, I've kind of backed off that a bit. I love the idea of structuring deals so that we can hold them for the kind of proverbial forever.
Yeah.
Having seen the market dips, I know that sometimes you might have to sell. I don't want to ever have to sell when it's a bad time to sell. Sometimes it might say that different. Sometimes it might be a bad time to sell and I don't want to have to sell then. And so I structure basically just based on, we're going to be on this roller coaster ride. And at some point in the future, we're going to be way up at the high, and we're going to decide like that Godfather offer came in, let's take it.
Yep. Or refi or do something. But I don't want to go into a deal with this like, okay, we're going to be in and out, and it out has to happen here or else we're screwed. We really don't want to do that. I think it's smart. Yeah. I think we do pretty much the same thing. I mean, the way our docs are written, we underwrite everything on a 5 or 7 year outlook, but we could hold it. We could end up holding it longer. We could end up holding it shorter. We kind of hold that discretion. And, with a lot of these older buildings, the truth is you can't hold them forever. Like you buy a building built in the 70s or 80s.
Depreciation is not, it's real. It's not just fake.
Yeah. It's not just something you get for free. Depreciation's real, especially in a market like Houston that's, a little soggy and wet and,
it's true.
Has some weather. What do you think as you kind of look forward, does it continue expanding throughout Texas, other markets, or there's plenty to say grace over where you're at?
Yeah, it's funny. The deeper we get into these markets, the more deals we're finding. And, yeah, so I don't think we're going to go outside of this for a long time. I'm incredibly impressed with what you've built, but it's just not the same. Like, I don't want to get as big as you have. I want to do more kind of, I want to have, I've got 10 people on the team right now where we might add a few more positions, but I really don't want I don't know. How many do you guys have now? Is it 40 or so?
Yeah, I think we have, I'm going to get it wrong, either 48 or 52.
Yeah. Somewhere around there. Love it.
Yeah.
Yeah. My goal is not to get that big, but to stay very specialized and do just, bomber. I want every one of the deals we do to just be this work of art that delivers really strong returns to investors.
Yeah, I think you hit an inflection point where we don't really think about it in terms of size, or because even to get to 50 people, you have to have built the leadership team, the management processes in place. So I'm probably going to, if Jason listens to this, he'll probably laugh, but you get to a point where even as you're adding headcount, it's not like continued stress of any kind. It kind of fluidly adds positive momentum to the business, but you have to have the right systems, processes, and structure in place.
To get there. Yeah.
I don't think we ever, I take that back. We, for a long time, dreamed of building an enormous company. Probably some of those were misguided dreams for reasons that probably aren't.
It's because we all read Good to Great, right? What's your BHAG? You got to have this big, hairy, audacious goal.
I know. And it's what's happened. And obviously, like you, we continue to find a ton of value in the assets that we're going after. Mm-hmm. We do focus. Over time, we've niched down into the much smaller tenants, but lots of them. I think we have 1,800 or 1,700 now.
That's impressive.
But that requires a unique management skill, and we decided to build it out. And it's the reason why a lot of people say, like, we don't really want to do that. It's more management intensive. You're dealing with lots of tenants, and so
I mean, some of these are they're almost like the trailer parks of industrial. If you get into the real small spaces, it's a lot of work.
Yeah, it's real work.
Yeah.
And it's forced us
a lot of value.
It's a lot of value.
You get paid well for doing that work.
And you get a lot of data, and there's a lot from it. And again, the smaller the spaces get, I like how you said that deal in Katy had 5,000 foot spaces. And Katy's a great market, but if you're really like inside the loop of Houston, you probably couldn't recreate that property you're building like inside Dallas or inside San Antonio. And so we see, demand and tenant demand continuing to be there, and no new properties showing up. And, tenants those average tenants serve probably a 1 to 3 mile radius around them. It's not like they're driving all over the core of their, so, if a new building pops up in Katy, my tenant in Houston probably isn't going to Katy just to get a newer space.
Yeah, almost all the tenants that we've talked to in Katy are basically opening a branch out there. They're in Houston, and they want to be, this is a new market with a lot of new rooftops and a lot of new jobs out here. So,
are you seeing deals trading right? Like you said, you have some under contract.
We do. Yeah, we've got some. Man, I think we have 53 million under contract right now.
That's awesome.
All stabilized in I say cap rate. What I mean is unlevered yield on cost, because that's the only thing that really matters to me.
Yep. Which is
the total cost, included purchase price, closing costs, our fees that we collect, plus, if there's any vacancy or tenant leasing commissions, all of that. I want all of that to be in there, where a cap rate just says, you paid $100 a foot and you rented it for $10 a foot triple net. So you've got a 10 cap. It's that kind of stupid, simple math. Where you're forgetting about is
there's extra costs,
which could be $15 a foot or $12 a foot. Sometimes you got to replace a roof or something, and all of these things matter. So when you look at that kind of unlevered yield on cost, I want to be able to stabilize in that, 10, 11 range.
Wow.
So that we've got a big gap between, what our unlevered yield on cost is and the potential interest rates, which it did sound like today that they might not be going up very much more.
I was going to say, as we sit here, Uncle Powell raised 25 basis points more, but thought this might be it. We don't know. It's been a quick climb.
10th time's a charm, right? It is the 10th in a row raise.
Yeah. Whew. And the market's bifurcated. I mean, people say the word real estate like it's this one thing, and it's markets, it's geographies, it's asset classes, it's classes within classes of asset classes. And so there's certainly going to be some pain in some areas. I'm still waiting for that sign that maybe lease rates in industrial are slowing down, or and it's just not there yet.
Yeah.
So
same.
we'll see.
I mean, we could certainly handle it. We underwrote for it, but we're not seeing it. I mean, it's just not happened yet.
We have our first deal under contract of the year, and we're at I think we're at 6.25% fixed for 3 years, and then Treasury plus 250 for the remaining 2 years.
Wow.
We did a deal.
Yeah, that's not bad.
We did a
That's
deal we did a deal in January actually that we had put under contract law before that. Interest rate was in the 7s.
Yeah.
And so the thought there is it worked in the 7s and it works in the 7s, but we would get a nice lift if interest rates went back down at some point. Candidly, I think higher rates for longer are probably better for the industry in general.
Yeah.
It makes the people that are really going to be in this and operate and really be professionals exist, and people that just jumped in.
Yep.
Because even when you jumped in like 2020, 2021, when we got in like 16, there was people doing it, but nothing.
Yeah.
I mean, over watching the last 7 years, there have been a lot of people jump into the market, people pivoting out of other asset classes.
Certainly.
I remember the first deal we took to market, there was we were selling it. This was way pre-COVID, probably 40 people in the data room. And then in the heat of COVID, when the market was just going nuts, we had some data rooms with over 200 buyers in there.
Wow.
Now that's shrunk again.
Yeah, certainly back down. But
because in general, there's equity and there's debt for good deals, but in general, it's still slower right now.
Yeah.
I don't know how long it's going to last.
Yeah, it's amazing what that kind of compounding over years effect of having built relationships with investors does.
Yep.
I've talked to a bunch of peers who are saying they are not able to raise equity, and we just have not seen that whatsoever. Yeah. We did a raise 2 weeks ago, and it was only sent to existing investors, full within 18 hours.
That's awesome.
Done. Okay. We're expecting to have to send it out. We've got this big list of people who have asked for our deals, and we just haven't sent anything to them because it keeps getting full by our existing investors. Is
your goal to keep growing through one-off syndications through high net worths, or will you take on institutional capital or?
No institutional capital. I always am tempted. I've done it before and actually did it on the stuff that I was doing in Africa. I hate those negotiations. Don't like being owned by some organization that's at the whim of some kind of often completely disconnected forces that are telling them what to do, that are then telling me what to do.
Yep.
And so I'm accepting the slower growth and saying that, we want to basically just hit it out of the park, meaning solid returns on every deal we do, but also excellent communication, just do everything we can to make sure to be clear and honest and upfront about it. Even if something went bad, be upfront about it. And if that's a throttle on our growth, I'm good with it.
Yeah. It's kind of what you said at the beginning. If you're communicating with people can accept bad news. People don't like surprises.
Yep.
So bad news quick, just no surprises, I think is.
I always joke with my team that someday we're going to send out I hope I never have to, but someday we might have to send out an email to investors that says, we underestimated the chance of a hurricane or a tornado in the area and the building has been flattened, and that's on us.
Yeah.
We're just going to own it because, we should see, our job to our investors is to see every risk that could potentially happen and to plan for it.
How do you how do you structure the team? You guys have asset management, acquisitions, accounting, how do you think about the organization structure?
Yeah, we've been going through the EOS process, which has been real fun.
Yeah, that's humbling.
It is. You realize how much kind of structure you need.
Yeah.
Asset management, just fantastic team right now. And that's taken some time to build. Asset management guy, acquisitions is 2 people. Acquisitions, actually, sorry, it's 4 really, but one guy that mainly runs it and another in-house that does transaction coordinating. And then 2, we've got one kind of in each market, Houston and San Antonio, that are on our payroll, but also get commissions that are just kind of finding deals for us.
Yep. It's awesome.
Yeah. And then an accounting team, and it runs real well. And then a couple of support staff. And I've got a chief of staff. That was a Michael Girdley suggestion.
Yeah. How's that been working out?
That's been really good.
Awesome.
I actually promoted from within on that. Morgan, her name is. She's just fantastic. Does a really, really good job.
What does the chief of staff do for you?
In everything with me.
Yeah.
So she's in my email. She's basically kind of everything that happens, she's a part of.
Yep.
And when we walk out of a meeting that we've both been in, she actions everything that's going to happen. So, I mean, it's weird because it's almost like halfway between a chief operating officer and almost like an executive assistant, because there's so much, and we do have some admin too. So she doesn't get stuck in the admin work, but there's so much that kind of needs to happen that she just makes sure it happens and just like got her finger on the pulse of the team and enables me to be more strategic in, is this the right kind of deal? Is this the right time for raising capital? What's the messaging? What's our brand look like?
Yeah. Is the best way to train for that role literally just through osmosis, like being with you all the time?
Yeah. Yeah. She started as investor relations.
Okay.
And still that function goes under her, but she's got a team now.
Cool.
Under her. But yeah, I mean, just being right there. It's also just the right personality. Like,
yeah.
It's a tough hire.
I've been fascinated by that role. Never had one. I have an amazing executive assistant that, you know, maybe at another company would be considered a chief of staff. I haven't thought about it, but it seems to be a more popular role. I had Girdley on here. We actually talked a lot about the chief of staff role. And so I think it's cool that you got one.
Michael's on our, I don't know if you call it a board because we don't have an official board, but he's one of the kind of top advisors that on our team, and has
awesome.
Has some equity in deals as we do those. And it's just been fantastic. I mean, that
he's the best.
Help that he brings to the table, and he and I we just have so much fun working together. Right?
That's awesome.
Yeah.
He's great.
Yeah.
I thought we could finish it on how we met through Twitter.
Yep.
How did you get on Twitter? Were you always on it, or?
We don't have to go back far in the conversation. Michael Girdley, I was buying a building from him, from his fireworks company.
Oh, wow.
Doing due diligence on him because it was a sale lease back. Actually, we didn't even complete the transaction, so I never bought it. During due diligence, asked for a call with the owner, got on the phone with him, and just thinking, I have no idea who I'm going to get on the phone with. Got on the phone with him and was like, this guy is really interesting.
Yeah.
Like, who are you and where'd you come from? And we ended up talking for like 45 minutes, fascinating conversation. And at the end, he was like, go get on Twitter. Like, I think I had some account that I never even logged into. And that was like towards the end of 2021. So it hasn't even been that long. Found him, found you pretty quickly, and then just kind of went from there. And it's been fun.
How's it impacted you and your business?
Yeah, it's been great. I added it up the other day. So this is money raised, deals bought sourced through Twitter, or, kind of just the volume of business that I've done through relationships that wouldn't be there if I didn't have Twitter. And it's 88. Well, actually, it's more than that now because we did another one. So we do the math in my head. It's $93 million.
Wow, for raised equity.
Raised equity deals that we've bought through Twitter, sourced through Twitter, or sold through Twitter.
Unbelievable.
Yeah.
It's a powerful tool.
I'm paying the $8.
So. I'm paying the $8. If you stay out of the dark corners of Twitter and know how to use it, it can be super powerful.
It does feel like a bit of its soul is gone. And I'm hoping it can come back around. But
we'll see. I think Elon's. I never bet against him.
Yeah. Yeah.
But it's
he overpaid, so I think he's got to do some things to make it work.
I was able to see the deck on his money raise and like the future of it. And he's kind of already alluded to a lot of this, like potentially partnering with the finance company and allowing banking. And he's got a much bigger vision for Twitter that's way bigger than the way we currently use it. So,
well, and there's several Chinese companies that have done that successfully, become kind of the super app.
He's had that super app in his mind since the PayPal days.
Yeah.
And I think he just announced that he bought like X.com or the X.com.
He's had it since PayPal. He's owned that domain. So
for something like this. And so
here it comes.
What's most interesting is, their headcount's down like 70, 80% and
still working.
Still works. I think that's...
Although I got locked out yesterday and could not get back into my account.
Oh, I did too.
Did you?
For like an hour.
Yeah.
Yeah. I actually called my IT guy. Shane, and said, Shane, I don't know, because it was still working on my phone for a little bit,
right? But
I couldn't get on Google Chrome. And then, of course, like all things, as soon as he comes to help me, it worked. Just his presence.
Like magic. Yeah.
All right, Levi.
Thank you.
Thank you very
This has been
much.
so much fun.
This was great. Appreciate it.
Yeah.